Hello, bankers. A very good evening to all of you. Welcome back. So, guys, in this particular session, we are going to discuss our unit number 22, which is all about bonds and bond valuation, right? So, this is the unit which is also help you in your CIV examination in your BFM paper, right? So let's quickly discuss the areas of this particular unit. Okay. So when it comes to calculation of YTM, YTM means yield to maturity. So it is all about bond valuations. Okay. So where we have bond value calculation as well as YTM, right? Sorry, current yield. So, meaning of debt, introduction to bonds. Then we have term associated with bonds, types of bonds, optionality in bonds, valuation of bonds. ठीक है. Bonds value with semi-annual interest rate, current yield on bonds, ठीक है. Yield to maturity, theorem of bonds, ठीक है. Duration, properties of duration. Then we have bond price volatility. ठीक है. So when it comes to this particular unit, there are few important subtopics. ठीक है. So one is आपका terminology. Sometime you'll get question around this. ठीक है. Different type of bonds, optionality in bonds, valuation of bonds, and current yield, right? And then theorems of bond value is again and theorem of durations. ठीक है. These are some important areas, and you can expect 2 marks question based on this particular unit, right? So, like full of concept, you have to develop concept very well. Then only you will be able to answer question related to this particular topic. Okay. So I hope everybody know what is debt or what is bond. Okay. So debt is a part of the capital structure. So companies they can raise funds through like when it comes to the capital structure, it can be either equity where they are sharing the ownership with the prospective investors. The another form is debt. So debt means they are taking it as a liability and they have to pay off these particular one. Okay. When it comes to debt, it is like the one of the most important or most famous tool under the debt securities is basically your bonds. Okay. So when it comes to bonds, bonds are kind of like these are the financial instruments which generally offer a fixed rate of return most of the cases. Okay. And this return is usually semi-annual or means in every 6 months they release that particular interest rate. Okay. So they get issued on a like fixed coupon rate. Okay. And when it comes to companies, they are raising funds for a fixed time duration, right? Let's say there is a XYZ company, they raise funds, आपका ठीक है, they issue a bond, ठीक है, I like XYZ company promise to pay, ठीक है, this amount, let's say आपका face value is 1000, ठीक है, at a coupon rate which is called rate of interest, ठीक है, of 10%, which is payable आपका, it can be per annum or it can be semi annum also, ठीक है, and the maturity like they are raising this particular funds for 10 years. ठीक है. Sometimes these type of instruments they get issued on discount also, especially when it comes to the sovereign bonds, bonds which are generally issued by government of India. ठीक है. They always issue bonds on discount. Discount means they'll issue bonds on discount on face value. ठीक है. So let's say the face value of that particular bond is 1000, so they'll issue it at let's say for 600. ठीक है. So at the time of maturity, investors they'll get 1000 rupees, and at the time of investment they have to pay 600 rupees. These kind of things. So there are so many things, terminologies and all, they are generally associated with this. So when it comes to bonds, it is a debt instruments through which companies and governments they are raising funds for long term period at a fixed rate of interest for a fixed time duration, right? So that timing is generally known as your maturity. So that like let's say in this particular case it is 10 year. Coupon rate is basically the annual interest which is paid by the company to the bond holders or investors, and face value is basically which is placed on the face of that particular bond, right? Nowadays bond they also get traded in secondary market. So basically like bond they generally get listed in stock exchange, And investors, they generally buy sell them in the secondary market also. Okay, as we used to do trading in equities, similarly you can also do trading in bond also. Okay, so that's why sometimes what you will do, their market price is different from their face आपका face value. Okay, so the market value can differ from the face value, right? Let's say the face value is 1000 and the bond is trading at 900. If it is trading at 900, that means it is on discount. It is a case of discount here. And if the market value is 1100, so it's a case of premium. Okay, so it's a case of premium. That means like why this is a case of discount or why this is a case of premium, because if you purchase that particular bond today at 900, at the end of the 10th year it will become, or you will get 1000. That is the face value of that particular one. Okay? And that means it is on discount. Okay? And when let's say the market value of bond is 1000 1100, sorry, okay? And face value of 1000, okay? If you purchase this bond today, at the end of that maturity it will become 1000. So it will automatically, the prices will come down till maturity, it will become 1000 only, right? So at the time of maturity. So this is case of premium and all. Okay? So bonds, basically companies, corporate houses, and mostly government, okay, they issue these kind of instruments. And we have so many type of bonds available in the market. Like I hope you heard about the sovereign bonds or inflation linked bonds, or we have corporate bonds, or we have treasury bonds and other also. Okay? So as per the issuing authorities and all. Okay? So in this session we will be discussing all these along with this premium discount case, or the YTM things, like how we calculate the bond value. Okay? So and the current yield. So one aspect is current yield. They ask this question every time in your examination. So current yield is basically कि let's say how they'll ask you question. There is a bond whose face value is आपका 1000 and bond is currently trading at आपका 900 in the market. ठीक है? And the coupon rate is 10%. So calculate the current yield. Current yield is something, the concept why it is ठीक है, कि if I purchase that bond today, so if I hold till the maturity, so what return I'll get from that particular one. Okay? In this case, if it is a case of discount, obviously your return will be more than आपका this current this coupon rate. Okay? If the bond is in आपका premium, so your current yield will be less than your आपका coupon rate and others. So these are the things which are generally part of this particular one. So in this session, with bond theorems and others, we will make our understanding, will understand all these particular. So let's start the session with very basic things, which is your bond terminology. Okay? So there are so many terms which are generally associated with bonds. So let's decode all these particular terms first. Okay? So first one, we have face value, which is also known as par value. So face value is nothing, it is the value which is stated on the face of bonds. Okay? That means this is the amount which is the company or the corporate or the governments, they are raising from the public. Let's say the face value is 1000 of a bonds. Okay? So that means they are raising or the investors, sorry, the borrowers, they are raising 1000 rupees from investors, where they are making some sort of commitment ki the coupon rate is 10%. Okay? So they'll pay 10% per annum return on this one. Okay? So they are like simply saying it's a kind of a, let's say when we invest in FD, you invested 5 lakh rupees at 7% per annum, okay, on compounded basis. So this is something like this. Okay? So this is a kind of a like let's say we have 1 unit and that 1 unit will cost you 1000, and on this 1000 we will pay you 10% return. Okay? So when it comes to face value, which is also known as par value, okay, so the amount borrowed by a firm stated on the face of bonds repaid after specified period, means your maturity period. Okay? So investors, they'll get back this particular value 1000 rupees at the time of maturity itself, right? The another one is coupon rate. It is nothing, it is just rate of interest. Okay? So this is the this is called coupon rate. Okay? The specified rate of interest on bonds, which is called coupon rate. Okay? Maturity, for how long we have issued this particular bond, or for how long that borrower is raising funds. Okay, so this is your maturity, 10 years, like let's say in this particular case. Okay. Redemption value. Okay. Redemption value is something like, as an investor, if we purchase this bond and if we hold till maturity, so what amount I'll get. Okay, let's say at the end of first year, the redemption value will be 1100. How it came to 1100? So 1000 rupees is the face value which we have invested. We got 10% return. 10% of 1000 is 100. So 1100 rupees is the redemption if the bond period is 1 year. So that is the case. Okay. So value received by bondholders on maturity generally are redeemed at par value. Next one, interest rate आपका fixed. So now we can have interest rate, we can have fixed or floating. ठीक है. So fixed rate known bondholders also called coupon rate. ठीक है. So interest on debentures or this market value, which can be different. Like this nowadays bond, they generally get traded in secondary market. So market value, which generally decided on the basis of demand and supply. Let's say if there is a high demand for that particular bonds, the value will go up. So suppose that that bond is currently trading at 1050 rupees. So that is the market value of that particular bond, which differ from the face value or par value. Okay? But at the end of the maturity period, at the end of 10th year, it will come down to your aapka the face value of that particular bond. Okay? Price at which the bond bought or sold in the secondary market may differ from the par value or redemption value. Okay? Then we have day count convention. This is very, very important. This get asked so many times in your examination. So now it is about the interest rate calculations. Okay? It is very simple concept. Okay? So when it comes to day count conventions, it is like how we are going to calculate that particular interest. Okay? Like let's say we have these are the different one, actual 365, ठीक है, or we have actual, we have actual 360 and we have 360. So what is the meaning of this? Actual, ठीक है, the number of days we hold that particular bonds and the number of days in the month, ठीक है, that is actual, ठीक है, use actual number of days. So that is the one. Okay. So method used to calculate interest payments. Okay. Actual. Let's say you purchase a bond and you sell after 20 days. So your interest we will calculate on actual. Let's say the annual interest is 10% per annum. Okay. So then we can that 10% can be, we can have half annually, 6 months. Then we can have quarterly, we can have monthly, and we can have daily. In India, we stop the that calculation on daily basis. Take a 10% per annum. Then if it is आपका half yearly, so it is आपका in simple interest it is 5%, but when you go for the compound interest it will vary, right? Then we have monthly आपका 10% divide by 12 आपका, ठीक है. We have daily 10% divided by 365, ठीक है. So that daily interest, so we will pay out only for 20 days in that particular case, ठीक है. Actual 365, actually how many days you have hold that particular bond, and we will assume there are 365 days in a year, okay? Even including the leap year, okay? In leap year, let's say if we have 364, we will not consider that one. We will go for we'll assume that there are 365 days in the year itself, okay? Actual 360 आपका, assume there are 360 days in a month, sorry, in a year, okay? And 30 360s in a month we will be considering आपका 30 days. In a year we will be considering 360 days आपका, ठीक है. So each month assume have to 30 days. If you hold for 30 days in others, so that will be accordingly this, ठीक है. Alright guys, so this is something which is आपका that is generally known as day count conventions, right? Chalo. So I hope you get this particular thing clearly. You got one unexpected get. What are you doing here? Go. Sit there. Sit. All right. So this is something which you have to remember. Okay. Now we will be discussing some terminologies in detail also. Okay. So coupon rate आपका. I hope now you get these particular thing clearly. Still, you can go for this one. A bond carries specific rate of interest, which is called coupon rates. How we calculate this? So coupon rate is आपका annual coupon payments, ठीक है, divide by face value of bond into 100, ठीक है. So annual coupon payments means आपका, let's say let's say as I gave you in case, ठीक है. So face value is suppose that 1000, ठीक है, and your coupon rate is suppose that आपका 10%. Okay, so if you have to calculate the annual, so it is आपका annual coupon, which is how much? आपका 10% of 1000 is 100. ठीक है, divide by आपका 1000 into 100. So that is the outcome for this one. ठीक है, so as it is already mentioned 10%, so that is the case in this one. ठीक है, the another one is maturity. A bonds is issued for a specified period, which is repaid on maturity. Like it can be for 10 years, 15 years, or आपका like sometime it is, if it is deep discounted bond, it can be for 30 years also, right? The next one is a redemption value. The value that bond holders get on the maturity, that is called redemption value. Day count conventions, sorry, face value. Then we have two things, face value and place value. So when it comes to face value, it is also known as par value, which is placed on the face of that particular bond. Like in our case, it was 1000. Stated on the face of bond, it represents the amount borrowed by the firm which it promised to repay after a specified period, right? Place value is आपका in multiple of, let's say the face value is 1000 and there is a investor who is purchasing 10 units, so it is into 10, or it can be 100, or it can be 1000, or it can be 1 lakh. Okay, so these number of bonds, like that is the overall value that we are going. Okay, so place value is defined as the digit multiplied whenever wherever it is placed, either by hundreds or thousands and all. Okay, so the overall value, like this is the face value 5 rupees, and that investor is investing in 1000 units. So 5 into 1000, so this is your place value, that is आपका 5000 rupees. So market value, now as I told you this. So the bond may traded in stock exchange. Market value is the price at which bond is usually bought and sold in market. Market value may differ from the par value or redemption value. It can be in discount, it can be in discount, or it can be in premium आपका. So what will be the case of discount? When the face value is higher than your market price. And what will be the case of premium? When face value is आपका face value is higher than your market price. Let's say the face value of a bond, is 1000. And the bond is currently trading, market price is suppose that 900. So it is a case of discount. And premium is the bond is currently trading at, let's say, 1200. So it's a case of premium. So that is the one. This understanding is very important. You'll get to know while you calculate the current yield and also that will help you, right? So day count conventions. So we can have the interest payment are made based on the day count convention. Various day count convention are there. Actual. Then we have actual 365. Usually we use this one. In Indian debt market, we use actual 365. We calculate the actual number of days for that period investor hold that bonds, and in a year we calculate आपका 365 days. Actual 360 आपका, where we are considering in a year we have 360 days, and 360 आपका in a month we are considering 30 days, even if it is February also. And in a year we are considering 360 days आपका. So that is the conditions. So these are the terminologies which are associated with the bonds. Now the next part आपका, that is types of bonds. So types of bonds. So we have various type of bonds. So it is categorized based on the issuer also. Like government bonds, आपका corporate bonds and others. It can be आपका fixed and floating rate bonds आपका. It can be discounted bonds, zero coupon bonds. It can be inflation link आपका. So inflation link bonds and others, tax free and others. So there are so many things. So we have fixed rate bonds, floating bonds, zero coupon bonds, inflation link bonds, perpetual bonds, subordinated bonds or debt, or corporate bonds. Apart from this, we have another list also. So out of this, fixed and floating rate. So when it comes to fixed rate bonds, that is आपका, let's say there is a XYZ or the government of India, they issue a bond at a face value of 1000, and the coupon rate is supposed at 10% per annum. Okay? So this is a fixed rate bonds where basically government, they are raising funds for 10 years at a fixed rate of interest, that is 10%. Okay? So government is making some sort of promise, or the issuing authority or the company is making some sort of promise ki we will pay you this much of interest for during this particular period and all. Okay? And there will be no change in the in that particular interest. Now the another one is floating rate आपका, ठीक है, where interest rate is linked with some indices. ठीक है? So let's say this is आपका, there is a bond which is issued by government of India, ठीक है, and which is आपका floating. तो that is, let's say this is linked with आपका LIBOR, ठीक है? So this is linked with your LIBOR system or ARR system, ठीक है? So accordingly, like in every quarters, we'll change the rate of interest of this particular one will change. Let's say it is LIBOR plus 1%. So whatever changes in this particular index, so these are index आपका link bonds, ठीक है? So as this index rate will get changed, similarly the interest rate of bond will also get changed, ठीक है? So that is your floating rate. So they are linked with some indices. That indices can be any benchmark, right? So then we have zero coupon bonds. Mostly you will see whenever government issues securities, they issue securities on zero coupon bonds. Or zero coupon, like it can be treasury bills or else in bond also. Let's say government of India, they come up with a bonds whose face value is supposed at 1000, and currently this bond is get issued on discount, and the discount price is supposed at आपका 600, ठीक है? So what government is saying, and the maturity period is supposed at आपका 7 years, ठीक है? So what government is saying in this particular case, you give us 600 rupees right now, ठीक है, and we will pay you आपका 1000 rupees at the time of maturity. So zero coupon means there is no interest rate. That does not mean कि you will not get return from these kind of securities. Then otherwise, why we will invest in these kind of securities, right? So when it comes to zero coupon bonds, it is they get issued on discount basis, right? So the bond face value or par value is 1000, and government issued these bonds at आपका discount at 600, ठीक है? So you pay us 600 rupees right now, and at the time of maturity we will give you 1000. So there is a kind of, you are getting a return of 400 rupees in these kind of instruments. So that is zero coupon bond. Inflation linked bond, this we'll discuss in detail. We have a dedicated slide for this. Perpetual bonds, when it comes to perpetual bonds, it is also known as PrEP. PrEP means a kind of equity. So this is called bond with no maturity. So bond with no maturity period. So bond with no maturity period. So that means like there is no maturity in this particular case. It is a kind of a equity. But the difference between perpetual bonds and equity is, in case of equity, as an investor, we does not get any sort of fixed return. But here, the other features are of bond. Like you will get 10% per annum return for आपका till the time the company redeem those particular bonds. But they does not have any maturity period or any clearly stated maturity on these particular one. Subordinated bonds. Subordinated, as the name said, subordinated means secondary. It is also known as secondary debt. They are risky in nature. That's why they offer higher rate of interest also, right? So this is similar to bonds, but if that company fall in any case of liquidations, so the priority given to these type of bond holders is secondary. First, company will pay off the primary debt, then they'll pay off these kind of investors. Then corporate bonds, which is issued by the corporate house, let's say TCS or Reliance, they issue some bonds, that is a corporate bonds. Tax-free bonds, which generally provide some majorly these type of bond issued by the government, and they are for a specific purpose like infrastructure bonds or green bonds and all, and the government, they offer some sort of tax relaxation with these kind of things. So public sector, आपका government, municipal authorities, state governments, central government. So these are basically based on the issuing authority, that is the categorization. So now one by one some important areas, so that we'll be discussing all these. So as I told you about this inflation linked bond, a security designed to help protect investors from आपका inflation. ठीक है. So now I hope you guys remember the concept of that just that we have discussed in our IA and IFS, ठीक है, real income concept, right? Let's take a case so you can easily relate this particular one. ठीक है. So suppose that there is a bond or आपका let's say there is a company XYZ, they come up with a bonds and whose face value is supposed at 1000 and the coupon rate on this particular bond is 9% per annum, ठीक है, and the bond is for suppose that 10 years, ठीक है, this bond is issued for the 10 years, ठीक है. Now what happened in this particular case, ठीक है, so suppose that like that this the simple meaning of this particular one is suppose that if you pay 1000 rupees today, so every year we will pay you 9% rate of interest on that particular one. That the basic interpretation of this one till 10 years, ठीक है, for next 10 years. Usually how we generally make this investments, ठीक है. So now what will happen or what how the inflation sometime affect this particular thing, ठीक है. So suppose that if you count the simple interest, ठीक है, so every year you are getting 90 rupees on this particular bond, ठीक है. So sorry 900 90 rupees आपका, ठीक है, the annual coupon will be 90 rupees आपका, ठीक है. So you are getting 90 rupees on this particular bond. अब sometime what happened now, let's say this is the average return for the next 10 years. During that particular period, the average inflation, ठीक है, the average inflation during this particular period, average inflation during this particular period was supposed that 10%. It can be like in India we have 5% inflation on an average. Sometimes it may go up, right? So there are some circumstances and it happened in past also. Okay, so where the inflation rate was 10%, 11%, 12%. That's why we come up with these kind of instruments. Okay, in 2010-11 the inflation rate was 10.406%. Okay? So government, like those who invested in bonds, their return went in negative, right? So this is the situation. So now we have we have invested in some securities where we are getting 9% interest, but during that particular period inflation is 10%, so you are getting nothing from that particular investment, right? So after 10 years the average inflation of that period, like how you calculate, so it is called your concept of real income. So real income, how we calculate real income, it is your interest minus inflation. Okay, so interest minus inflation is increase in prices. I hope everybody know this. So in this case your interest is 9% and आपका inflation is 10%, so your investment went in negative, that is आपका minus 1%. Okay, so that is the case. So you did not get anything or a single rupee from that particular investment, and that went completely wrong. So like assume that you have placed आपका 100 crore rupees in these kind of securities, debt securities, and after 10 years you are getting nothing from those particular investments. So how you will feel? So to understand, after understanding this particular the effect of inflation, what government did, they generally come up with the inflation linked bond. Now how we generally come up, how what is the structure of or the structuring of this inflation bonds? These are generally linked with CPI. So we have CPI plus let's say 2%. Okay? So now they generally work on a formula of max inflation can be max or zero. Okay? We will not consider the negative inflation. If the let's say that in that economy there is a deflation during that period of 2% minus, so we will consider it as a zero. Okay? And max side, let's say if inflation is आपका, let's say your inflation is 15%, so plus 2%. Okay? You in any cases you will get this 2% return that got fixed with these kind of instrument. Okay? So let's say inflation is आपका minus 2%, so आपका you will get 2% of return because we have to follow the max or zero. Okay? So we will consider inflation as zero and we will get this rate of return. Okay? So that is inflation linked bond, right? So inflation linked bonds are indexes to inflation so that the principal and interest payments rise and fall with the rate of inflation. Now, like let's say in this situation, आपका if inflation is 10%, you'll get 10 plus 2%. Okay? That means this 2% anyhow you'll get from the market. You'll get overall 12% rate of interest. Out of 12, this आपका this like this is the fixed thing. Okay, that is the value which you are going to get from the market itself or from that particular investment itself, right? So inflation linked bond, perpetual bonds, which is also called a PREP, perpetual. So a bond with no maturity date, therefore it may be treated as equity, not as debt, and they are risky in nature. The feature which generally differentiate perpetual bonds from the equity आपका, because they offer a fixed rate of return, right? Then we have zero coupon bonds, as I gave you an example. These are when bonds get issued on discount. Okay? So the face value was 1000 and it got issued on discount of 700. Okay? Maturity is 5 years. So the case is simple. You pay us 700 rupees as of now. At the time of maturity, we will pay you 1000 rupees. So you will get 300 rupees return from this particular bond. That zero coupon, that does not mean you will not get any interest from this one, right? A zero coupon bond is a bond in which the face value is repaid at the time of maturity. It does not make periodic interest payment or so-called coupon. Hence, it is generally known as zero coupon bond, right? नेक्स्ट वन सबऑर्डिनेटेड सेकेंडरी आपका, ठीक है. सो सेकेंडरी डेट आपका, सो a debt which rank after other debt or primary debt fall at the time of liquidations, ठीक है. So again they are risky in nature, right? Then the next case is again very very important, okay? That is optionality in bonds, okay? So I hope we all know about the options, okay? So we have two type of options. One is आपका call option, another one is put option, ठीक है. So call option and put option. Similarly in bond also we have two options, ठीक है. One is आपका one is known as callable bonds, another one is आपका putable bonds, ठीक है. Optionality in bonds. So now see how this basically work. So let's say there is a company XYZ Limited who issue a bond at face value of 1000. Coupon rate is supposed that 10% and the bond maturity period is आपका 10 years, ठीक है. They issued this particular bond for 10 years, ठीक है. Now in this particular case, if this bond, like this bond can have two option, one is आपका callable, another one is आपका putable, ठीक है. So if the bond is callable bond, if the bond which is issued by XYZ Limited is the callable bonds, that means or that give right to issuer, ठीक है. Callable bonds which generally give right to issuer of the bond, ठीक है. Issuer means in our case it is XYZ Limited, ठीक है. They what right they get? A right to buy back that particular bond, ठीक है. Buyback means to redeem that particular bond from the market after a specified time duration, ठीक है. So company, they issued this particular bond for 10 years and they have a call option in this particular bond ki they can buy back that particular bond from investors after 2 years. So this is a right of company. They can exercise that particular right. This is a right but not an obligations. So they can buy back that particular bond after 2 year of period, okay? That is generally comes under this particular one, okay? So that is generally known as callable bonds. First आपका, ठीक है. When it comes to putable bonds, which generally give right to putable bonds, which generally give right to investors, ठीक है. Investors of that particular bonds, ठीक है. So this आपका investors bonds, ठीक है. So that is putable bonds, ठीक है. They have a same right, ठीक है. They can convert that particular bond into equity or they can force to the issuer to pay them back, right? So this is something आपका putable bond. So putable bonds which give right to investor. You just have to remember this line and this line, ठीक है. So here they have आपका right to buy back and here the investor they have right to sell back, ठीक है. Sell back to the आपका issuer, sell back to the issuer of that particular bonds, means that XYZ company after a specified or predetermined time duration. Callable and putable bonds, very important one, get asked so many times, so please do remember this one. A callable bond is a type of bonds that allow the issuer of a bond to retain the privilege of redeeming the bonds at some point before the bond reach its date of maturity. Okay? So it is आपका that allow or give right to issuer. Okay? You have to remember this one. When it comes to putable bonds, so putable bonds that give right to holder or आपका the holder of the putable bonds the right but not an obligation to demand early payment from of the principal. Okay? So a putable bond is a type of bonds that provide the holder means investors the right but not an obligation to force the issuer to redeem the bonds before the maturity date. See, so optionality in bonds, callable and putable. Very important one. I hope you get this particular point clearly. Okay? Now, apart from this, like fixed rate, we have discussed, okay, coupon remain fixed throughout the period. Floating rate, these are the definition which were given in your book also. Okay. So, coupon varies with a reference interest rate like ARR or LIBOR and others. Okay. High yield bonds, आपका, they provide high rate of interest, simply high risky. Okay. So, as I gave you an example of that, subordinated bonds. Convertible bonds, which can be converted into shares of that particular company after a specified period. Inflation linked bonds, आपका principal and interest payment adjust according to inflation. They are linked with some inflation indices. Asset back, आपका backed by the cash flow from the assets. So like this is something secure bonds, आपका. Subordinated bonds, आपका lower priority for the repayments compared to other debt. So they get secondary priority at the time of liquidation. After the company will pay the primary debt, then the money will come to the subordinated. That's why they are risky. Then we have covered bonds backed by the mortgage or public sector assets remain on issuer's balance sheet. Okay, let's say there is a company who issue bonds based on their आपका own building and all. Okay, so that is something. So that building will remain in the asset book of that particular company itself or issuer. But at the time of failure of that, like if that company fail, so the jurisdiction will sell the asset and they'll repay the amount of the investors. Perpetual bonds, prep, no maturity date, continue indefinitely. Bearer bonds, आपका certificate based, no registered owner. Whoever is holder of that particular bond, he is the owner of that bond. Earlier we used to have, but nowadays we do not have this. Government bonds, आपका, which is issued by the government. Majorly these get issued on discount basis, right? Now the next portion, which is something which will help you in your JAIB as well as in CIB, or if you'll go for some other certifications like CFP, CFAs and others, definitely you will see this particular things along with whatever we have discussed so far, right? So in JIB, in my experience, they never touch the आपका YTM things and all. So they though they ask a question based on current yield, but they never ask question based on the how to calculate or determine the value of a bond. But still, we'll try to make our understanding around this one. So as it is given in your book itself. So when it comes to valuation of bonds, how we decide the market value or that of any आपका bond. So bond provide future cash flows, which is आपका periodic interest payment. It can be half yearly or annually. And we have redemption value at maturity, which is par value or your आपका that face value. Okay? The value of bond is equal to present value of all expected future cash flows. The intrinsic value of a bond is a present value of all these benefits. Okay? So value of bond is आपका present value of all expected future inflows. Let's say how come there is a bond which get issued for 5 years. The maturity is आपका suppose that 5 year of a bond. Face value of this bond is 1000 and the coupon rate is आपका 10%. ठीक है, suppose that. So this is the case. Now that means at the end of first year, you will get 100 rupees. Then every year you will get 100 rupees from this particular one. Okay? At the end of first year, second year, third year, fourth year, fifth year, every year you will get 100 rupees. But this is something which is called future value. Okay? You are getting this 100 rupee at the end of first year. You getting this 100 rupee at the end of आपका fifth year. Okay? So if you compare and this outflow, the investment you are making in this particular bond 1000 rupees that is your current outflow. Okay? So you are investing today 1,000 rupees in that bond, and you are getting return at the end of first year, second year, third year, fourth year. Now we know the time value of money concept. Okay? So time value of money says today's 1 rupee आपका which has higher value than आपका one after 1 years or 2 years, 3 years, 5 years, 1 rupee. Reason, we can have opportunity cost and we do have inflation effect and all, right? So what you have to do, you have to calculate present value of these future inflows. Okay, so you have to calculate present value of these future inflows. How you will calculate that particular one? Okay, that is आपका in case of bond it is interest 1 plus r की power, and it can be like in case of first year it is 1, in second year it is 2, 3, 4, 5. Okay, so with by this particular formula you'll get to know the present value of this 100 rupees. Okay, so if I'm making an expense of 1,000 rupees today, so and I'm getting 100 rupees by the end of first year, so I have to calculate the present value. This is the future value. You have to calculate the present value, and how you'll calculate the present value is this. So the value of bond is present value of all expected future inflows. So if you'll calculate, let's say it is 90 rupees, it is 85 rupees, it is 70 rupees, it is 65 rupees. So this is the present value of inflow from this particular bond. That is the case. Okay? So how we calculate, how actually we do the valuation of bond. So we have a formula, okay? That is sum of आपका, this is interest, okay? The coupon rate, or the coupon or the income or the interest you are getting. Like let's say in case of as I gave you in face value is 1,000 and the coupon rate was आपका 10%. Okay? So that means your annual coupon will equal to, or this I will equal to 100 rupees in this case. So 100 divide by 1 plus KD. ठीक है? KD is आपका cost of capital. ठीक है? So let's say it is आपका 10%, 12%, 13% or 9%, whatever it is. ठीक है? That will be given in question itself. ठीक है? Plus आपका future value. ठीक है? Future value, how much you are getting during that period. Again आपका 1 plus KD. ठीक है? So time and आपका n. ठीक है? So value of bond is equal to annual interest coupon. In this case, annual interest coupon is आपका how much? 100 rupees. Redemption आपका face value. ठीक है? Face value is how much? 1,000. ठीक है? Face value is 1,000. So then we have number of years, ठीक है? And we have cost of capital. So that is a discounted basis. ठीक है? So like how we are discounting the future values. There will the one numbers is given, like let's say it is 8%, 9%, 12% and all. So that will be in the case in this. Okay? So let's say, so take this example. Okay? So there is a bond whose face value is 1,000. Coupon rate is आपका 10%. Okay? Annual interest is आपका, so annual interest or annual coupon is आपका 100. Okay? So 10% of 1,000. Maturity period is 3 years आपका. ठीक है? And the cost of capital, or the it is also known as discount rate, is 12%. So how you will calculate this? Now very simple. ठीक है? So आपका 100 divide by 1 plus KD was how much? Your KD was 12%. So 0.12. ठीक है? So you'll do the same thing for 3 years. ठीक है? So 100 divided by 1 plus 0.12 2, then 3, then whatever value will reach, then आपका face value is 1,000, 1 plus 0.12, so it is for 3 years. ठीक है? So now whatever outcome you will receive, ठीक है? If the outcome, let's say the outcome is suppose that 970 rupees. ठीक है? After solving this equation, we reach to like I'm just doing assumption. ठीक है? I'm not calculating this. I'll show you the calculation. ठीक है? So 970 rupees. If it is 970 rupees, that means the face value is 1,000 and the face value is आपका 1,000 and the bond, the current value of bond. This is the current value. Current value of bond is 970 rupees. That means it is in discount and you should buy that particular bond. Okay? So this is in discount case. It is a case of discount when face value is greater than the आपका market value. So this is on discount and you should आपका buy. Why I'm suggesting you to buy? Because at the time of maturity it will become 1,000. So that is the case. Okay? So how you'll do the calculations. ठीक है, so PV interest आपका first equation, this first equation I'm solving, so this one, this part first, then we'll do calculation for this part. ठीक है, so आपका 100 1 plus 1 point मतलब it was 1 plus आपका KD, so 0.12, फिर 1 point is 3 years. ठीक है, so we reach to these particular numbers and the total of this is how much, इनका total करना पड़ेगा आपको. ठीक है, so the total is 89.29 plus 79.72 plus 71.19. ठीक है, so it is equal to 240.2. ठीक है, so this is the आपका present value of, what is this? This is the present value of future inflows. ठीक है, what we have calculated so far, present value of future inflows. ठीक है, so this is the first part we have solved. ठीक है, now in second part, what we have, face value divided by आपका KD. So it is आपका 1.12 की power 3 for 3, the maturity is 3 years. ठीक है, so we reach to आपका how much, 712. ठीक है, so now plus if you add this particular one, it will be 240.20. ठीक है, so it will come plus 712.99 is equal to so the current market value of this bond should be 953.19. ठीक है, this is the current market value of this particular bond. So now the face value is आपका 1000 and means it is a par value. At the time of maturity you will get this amount. ठीक है, and the current market value is this, so that means this bond is in discount. ठीक है, so this is the how we calculate, how we do the valuation of bonds. This is the formula, and this is the, if the value will be higher than that, let's say it is आपका 1100, so this will be in premium. ठीक है, so that is the case, it is mentioned here. So 953.19. ठीक है, so since the this less than the face value, the bond is selling in discount. ठीक है, so we'll be suggesting you to purchase this bond. The first case आपका bond valuation. In my experience of last 5 to 6 years, never ask any question around the valuation things, though you can practice these particular things. ठीक है, in CIB definitely you will get this one. ठीक है, now the next one is आपका, this get asked every time. Like in last 3 years, 6 session, every session you will see one question around the your current yield. ठीक है, so what is current yield? Let's say there is a bond, again आपका, let's say there is a bond whose face value is आपका 1000. ठीक है, it got launched in year 2000, let's say 23. ठीक है, so in 2023 this bond got listed in stock exchange. ठीक है, coupon rate is supposed at 9%. ठीक है, and the maturity is supposed at 10 years. ठीक है, so the bond get launched in 2023 or let's say 2020. ठीक है, so that means 10 years means it will get maturity in 2030 आपका. ठीक है, and we are in 2025, that means 5 years are remaining. ठीक है, so what this concept tell you, ठीक है, so this current yield on bonds, कि if you purchase this bond in 2025, if you purchase this bond today, if you purchase this bond today, and if you hold till maturity, if you hold that bond till maturity, what return you will get from this particular bond, or what interest or coupon you will achieve from that particular bond. So this is something which is aapka current yield, right? So how we'll calculate this particular one? It is annual coupon divided by your current market price into 100. That is a basic formula to calculate this one. Okay? So measure the rate of return on bonds based on coupon interest and current market price. Okay? So how you will calculate? Let's say in this particular case. Okay? So the present value is 1000 and currently in 2025 the current market price of this particular bond is supposed at how much? It is आपका 1050. ठीक है, means आपका the current market value is higher than the face value, it is in premium. If it is in premium, please listen carefully, if it is in premium, the current yield will be less than this. Your current yield will be less than 9%. How come? Chalo, let's calculate. So now your we know the formula annual coupon. Okay, so it is, you can also write it like current yield is equal to annual coupon divided by आपका करंट मार्केट प्राइस इंटू 100, ठीक है, इन परसेंटेज. सो व्हाट इज योर एनुअल कूपन, एनुअल इंटरेस्ट रेट? सो इट इज 9% ऑफ 1000 विच इज 90 रुपीज, ठीक है. सो आपका 90 रुपीज डिवाइड बाय करंट मार्केट प्राइस इज हाउ मच? आपका 1050, ठीक है, 1050. So if you'll calculate this 90 divided by 1050, so it is equal to 0.0857 into 100 percentage. So it is आपका, so your current yield is equal to into 100. So your current yield equal to 8.5714. This is your answer for this particular question. Okay, so it's as simple as that, and you will get 1 marks, or sometimes you'll get surprisingly 2 marks also, right? So this will be first question, and sometime the same logic which you will, while you study the theorems of bonds, these things are given in theorems. Okay, if bond is in premium, so the annual coupon is higher than the your current yield, which is true, right? So that is a theorem. Okay? And if bond is in discount, the annual coupon is आपका lower than the आपका current yield. That is also true. That we have proved through this particular one. Understood, guys? I hope you're getting this particular point. We'll solve 2-3 questions also. Okay? So let's say a bond with face value of 1000, a coupon rate of 7%, currently trading at 920, means it is in discount. What is the current yield? It is in discount. That means your आपका current yield will be higher than 7%. ठीक है? So what, how you calculate current yield is equal to annual coupon, ठीक है, divide by current market price into 100. So in this particular case, annual coupon is how much? 7%, 70, ठीक है, 70 डिवाइड बाय आपका 920, ठीक है, 920 into 100. If you solve this equation, you will get to know the answer. ठीक है, what will be your correct answer? So it is आपका 70 divided by 920. So it is into 100. So it is आपका 7.60, ठीक है, 7.6086, ठीक है, 86, or you can write it as 7.61 is the answer for this particular question. Understood? So that is the situation of it. We have here, yes. So option B will be right answer for this particular question. The next one, a bond with 10% annual coupon, face value is 5000, currently trading at 5500 premium. So आपका you have to calculate current yield, ठीक है, so it will be less than 10%, ठीक है. Why I am repeating this? Because it is part of the theorems. While you go through the list of theorem now, you will easily able to remember this one. Okay? So current yield is equal to 10% of 5000, which is 500 divided by आपका 5500 into 100. So what will be your correct answer? 500 divided by 5500 into 100. So it is आपका 9.09, ठीक है. So it is 9.0909, ठीक है. This is the one, ठीक है. So this is 9.1 will be right answer for this particular question if you round off that one, ठीक है. Now sometime they'll ask you this type of question also. An investor purchased 1000 bonds at 1100. Coupon rate was 8%. Again, if the bond prices drop to 950 in the market, how does current yield will change in this particular situation? Okay? So now what you have to calculate current yield. You can solve this particular one logically, or you can solve after entering the entire figures. Okay? Let's say go with the old state आपका model. Okay? So in first case, when we purchase, like see, logically means the face value is आपका how much? 1000. Okay? And the market price was how much? आपका 1100. So coupon rate was 9%. If the bond prices drop to 950, ठीक है, so what will happen in this case? Coupon current yield will be low, then here current yield will आपका increase, ठीक है. So like if you calculate for the first case, ठीक है, in first case आपका what we have, it is current yield is equal to आपका 1009. So it is 90 sorry, 90 divided by 1100, ठीक है, 1100 into 100. So in first case, your 90 divided by 1100 is equal to आपका 8.18. So earlier it was 8.18. ठीक है. So first, at the time when he purchased this particular bond, the current yield was 8.18. ठीक है. Now the another case, what happened after some time? ठीक है. So the if the bond prices drop to 950, ठीक है. So it is 90 divided by 950 into 100. So obviously it will, what will happen? Increased again. So 90 divided by how much? 950. So it is into 100. So it is आपका 9.47. ठीक है. So 9.47. ठीक है. If you go with the fundamentals, again you will get to know answer. If you will think logically, ठीक है. So earlier this bond was in premium, ठीक है. Later this bond is in discount, ठीक है. If bond is in premium, so what will happen? Like if the bond was earlier in premium, now it came to discount. So the interest rate will आपका or the current yield will increase, ठीक है. So that's why there will be no situation. There is like earlier it was this, it will move to this, not the higher to lower. Okay? It will lower to higher up. Okay? That's we have in this particular situation. So first option A only will be right answer for this one. Understood? Okay, so this is your solution also. Next one. Okay, so now you calculate this one. I hope everybody will be able to solve these questions. A 5-year bond with a face value of 10,000 has a current yield of 8%. If the bond coupon rate is 9%, what can it infer? Okay? So see, the आपका face value is 10,000, current yield is 8%. Okay? That means this bond is in premium. Okay? So the bond is in premium. Okay? The coupon rate is 9%. What we can infer? The bond trading in discount, the bond trading in at the premium. So option B should be right answer for this particular one. Got the concept of discount and premium. Okay? So with this type of interfer, you can infer these kind of things with them. They are part of theorems. Okay? There should be a list. This is the one. So now theorems of bonds. This theorem most probably they'll not ask in AFM, but in IN IFS, again we have this particular topic in module D. So they'll ask the questions around the theorems. Okay? Bond is part of both the subject, your AFM as well as in IN IFS. In IN IFS, it is more toward the fundamental aspect, the types of bonds or the terminologies or the theorems and others. Okay? In AFM, that's why they always ask question around the आपका current yields and all these kind of things. Okay? So when it comes to theorem of bonds, okay, so we have, if required rate of return is equal to your coupon rate, so bond value is equal to or market value is equal to your par value. Okay? So that is the case like where your face value is 1000 and market value is also 1000. If required rate of return is higher than the coupon rate, bond value is less than the par value. So that current yield आपका required rate means आपका. If required rate of return आपका is less than the coupon rate, so it is bond value will be higher than the आपका par value. ठीक है? So it's a case of premium. ठीक है? So this is a case of discount and this is a case of premium. So which is mentioned here in with these one. ठीक है? Same thing आपका which is mentioned here. If KD means आपका required rate of return is greater than coupon rate, it is in discount. ठीक है? And if it is आपका this, it is a case of premium. Bond price and yield to maturity are inversely related. ठीक है? Please do remember this statement. ठीक है? Bond prices, if bond prices will increase, maturity will decrease or vice versa. Right? Next one. For some differences between YTM, yield to maturity, and coupon rate, longer maturity bonds show a greater price change when YTM change due to compounding effect over many years. Okay? So let's say let's say there is a bond which get launched today and the bond is for 15 years. So there can be so many situations during these 15 years. So there will be more fluctuations. That is the meaning of this. Bond prices change is greater with a decrease in YTM as will reach to the maturity. So the fluctuation will come down. Okay? Because now we do not have any sort of arbitrage and there is least speculation in these kind of things. Okay? So this is the case. For given change in YTM, high coupon bonds have smaller percentage price change than low coupon bonds आपका. A change in YTM impact high YTM bonds more strongly than the low YTM bonds. Okay? So these are some statements or the principles which we try with that conceptual. If you understood those particular one, you will be easily able to infer these one. Okay? So you have to remember this. Okay? Now the duration. Now what is duration? First you have to understand what is duration. Duration and the difference between maturity and duration. Okay? Let's say there is a bond, XYZ company, they launch a bond for 10 years. Okay? This is maturity. Okay? This is called maturity. Now there is an investor who purchased this bond, investor A who purchased this bond, who buy and who sell this bond for 2 years. Okay? So this is called your duration. So difference between maturity and duration is आपका there is a company who issue a bond for 10 years. That 10 years means the company will return that money after 10 years or face value after 10 years. And you purchase that bond today and you sell that particular bond after 90 days. So that 90 days is kind of duration. Okay? So duration we can have other, like when we do the investment banking. Okay? So we generally make some analysis ki like how long we have to hold this particular security so it start giving us return on. So that is another use of this one. Okay? But in this bond case, this is the one. Now in case of zero coupon bonds, so like what is the inference from this one? Okay? So your maturity, sorry, your duration can be less than equal to maturity. Okay? It cannot be greater than maturity. Reason being, like it can be after 2 years, 3 years, or max to max it can be 10 years. In case of zero coupon bonds, okay, that zero coupon bonds where we do not have, like where in this case the duration is equal to maturity, because we are not allowing buy sell in between of those kind of securities and all right. So that is the one. So duration is always less than the maturity first aapka, except in zero coupon bond it is mentioned here. Okay? A bond duration is equal to term of maturity in case of zero coupon bonds, right? Duration of perpetual bonds, aapka, it is basically perpetual bonds, prep, they do not have any maturity. Okay? So infinity. Okay? Longer maturity, greater differences between term to maturity and duration. Duration and YTM are inversely related. If duration will be higher, YTM will be lower. If duration will be lower, YTM will be higher. Okay? So higher YTM, lower duration. Higher coupon rate, smaller duration as well. Okay? More frequent coupon payments, lower durations. Less frequent payments, higher duration. Duration decline as bond approach to maturity itself. Okay? So like let's say now this bond reached to 8th year. So now duration can be maximum 2 years. If you purchase today, you can hold for 2 years. And if this bond get launched 1 year ago, so you can have duration of 9 years. That is the meaning of this particular one. Understood, guys? So this is all about your bonds. Let's practice one small set of questions also. Okay. So which of the following bond carries highest risk during bankruptcy or liquidation? So what will be a correct answer? Subordinated, which is also known as secondary debt. Okay, subordinated debt. Like at the time of liquidation, they get secondary preferences, right? So subordinated bond rank below senior bonds or senior debt. Okay, in capital structure. In case of bankruptcy, it is paid only after all senior debt are paid. Okay, or settled. A government issue bonds that has no maturity date. So it is a zero coupon bonds. Yes, sorry. Sorry. It is आपका a government issue bonds with no maturity date. ठीक है, perpetual आपका, ठीक है, perpetual bonds. Sorry. So perpetual bonds, perpetual prep आपका bonds without maturity. Here, simple one again. Next one, bond that give the issuer the right to repay the bonds before the maturity. It is आपका mention right to issuer. So it is आपका callable bonds. If it is a right to investor, then it will be putable bonds, right? Next one, each of the following is a property of bond except him. So bond and duration will equal to the item of maturity if and only if it is a zero coupon bonds. True. Duration is less than the term of maturity. Duration and YTM are inversely related. Larger the coupon rate, smaller the आपका smaller the duration. So D आपका will be right answer for this one. ठीक है? So just now only we have discussed all these. If interest rate in market increase, the market price of bond will decrease or decrease increase. Increase decrease, A only will be right answer for this particular one, right? So next one, a puttable bonds provide the investor with option to extend no redeem the bonds before maturity. Convert the redeem the redeem the bond before maturity. No, it is redeem means buyback. It should be आपका convert the bonds into equity in this particular case आपका, ठीक है? So convert the redeem the bonds or buy back the bonds actually, ठीक है? So it is puttable bond, so it give right to the investors आपका, whoever holder of that particular bond. So it is mentioned at redeem. Redeem means buy back bonds before maturity. It can be. तो पहला ही थॉट वाज करेक्ट आपका. कन्वर्ट द बॉन्ड्स, इट इज कन्वर्टेबल बॉन्ड्स. इट इज स्पेसिफिकली आपका दैट इज एग्जैक्ट टू योर कंटेंट लेवल. अकॉर्डिंग टू द बॉन्ड प्राइस यील्ड रिलेशनशिप, what happened to the price of bonds if market interest rate increase? आपका the bond price yield, so it will decrease, आपका price will decrease, increase, so they have a inverse relations, ठीक है? So prices will decrease आपका, ठीक है? Which of the following are the feature of bonds? Bonds are debt instrument issued by debtors for raising funds. Bonds are issued for a specific period and carry fixed rate of interest. Bonds are transferable and traded in second. All are correct आपका in this particular cases, right? DAS are issued with no interest payment during the lifetime of investor. They get issued on discount, so it is zero coupon bonds आपका, ठीक है? Okay, this is it. So this is all about your आपका YTM, ठीक है? Which is all about bond market. I hope you enjoy this particular session. I hope you learn all these particular concepts and all, right? So now in next session we will be discussing around the forex market. Okay? So, and 31st onward, we'll be having live classes for like a 60 days plan for your November, the upcoming JIIB examination. Okay? And first, we'll be dealing with the IA and IFS, and I'll take feedback from people ki what they want, like in a week, two different subject, or one first a completion of one subject, or then two subject, or mostly we'll do like 3 days आपका IA and IFS, 3 days आपका AFM or PPB. Then accordingly we'll complete all these subject, right? So this is it from for today's session, guys. I'll see you tomorrow, and we'll start discussing our next topic, and we'll make our understanding around that particular one also. All right. So bye bye, take care all, and wish you all the very best for your preparation. Thank you.